Hey everybody. So in today's video, what we're going to do is go over an option trade that I did where I made over 100% in roughly 2 days. I think it was a little over 2 days, but we're going to get into it. And the goal of this is not only to show how we made 100% here, but also to show you how you can do this. It's fairly simple once you understand a couple things. So we're just going to jump right into it. So the very first thing that you're looking for before you even think about which option is you have to find the right stock. So in order to find the right stock, you're going to have to go through a litany of your ideas, look at your charts, and figure out which one makes the most sense for you to be looking for this to happen. Now, very simply, you don't want to be buying at the bottom of a range trying to do this and catch a falling knife. You can do that. Sometimes you'll get lucky. But this is about consistency and replication and duplication, right? Being lucky once, that's great. I don't want to make one trade. I want to make all the trades that make sense, that fit this criteria. And I also want to state that as we go over this, this is just simply one way to enter option trades. There are several others that I use. This is just very simply one way. So to start with, what I look for is I want to find a stock that has broken down and then starts to base, where it looks like it's been completely flushed out, where you just don't have anybody in it anymore. And the reason for that is because you're going to see increased buying when it moves. So just keep that in mind. For me, my trigger was relatively simple here. So the simplicity of it was all I wanted to do was get into this gap. That's all I was looking for right here, was to get into the gap on Amazon, okay? And by getting into that gap, I got into where you have a supply vacuum on volume. So by getting into that area, that allows me a chance to push. Now, this is going to be resistance, 50-day, and then you need to know how to draw these properly. Your downward trend lines, and you could see where we ran into resistance here, and we're going to address that in a minute on how to handle that with your stops. But once we broke here, okay, and I broke that level, okay, I personally will go and start looking at much smaller time frames. Okay, so I don't want to wait for the day to end on an option trade as I may with a stock. I want to get in and up as fast as possible. So then what I would do is I would focus on a 15-minute chart, okay? And these lines, depending upon your system, they'll overlay very similarly. So here's my 15 minutes. Here's my breakout and close above it. That's all I needed to see. The next bar actually confirms what I'm looking for, which is exactly what I need. I need confirmation that this is going to happen. And by getting that confirmation, which is what we did here, I was able to put the trade on. So that's what happened right here, and that's when we decided to put the trade on. Now the question becomes, why this stock? Or that's what you should be asking. Why would you put the trade on here? Well, when you break out through here, there's a couple things you're going to look at, okay? The very first thing you want to look at is what do I think that this could trade to, right? That's the very first thing you have to think about in your head. Where am I going to run into major resistance? So for me, looking at this, it was two areas, okay? And you need to ask yourself this on option trades. So I knew that I could run into resistance here, and I knew that I could run into resistance here. So I already knew that. So knowing that allows me to determine how far down the strike price I want to go. Okay, and that's one thing to look at. You have to understand how you're going to pick your strike price. So to pick your strike price, to me, it made absolutely no sense before I even drilled down into delta and implied volatility, which we're going to get into in a moment. It made absolutely no sense for me to try to pick something that is up here, right? Because I don't know that we're going to get through this. When I'm here, I have no idea if we are or not. But to me, I'm like, well, that's kind of that's a lofty area to get into. So I don't know that I want to look at anything over like 34.60. So why we picked what we picked and the options that I picked for myself in the community was very simple, okay? I want to focus on implied volatility, and you may want to write this down. You want to focus on stocks that have implied volatility on their option chain under 20%. If you can find that, it's a sweet spot. Okay, so implied volatility under 20%. And the reason for that is because The stock moved. So when this stock moves like this, we would all agree that the volatility is increasing. Okay, so theoretically, it's possible to make money with the stock just moving around on volatility if implied volatility increases. And that's important to understand because that means that the stock doesn't have to move as much if the implied volatility goes up, right? Because the pricing will go up predicated upon the implied volatility. The other thing that's very important for people to know is when you are buying, okay, and I'm at a strike price, you want that strike to be around 45 or 0.45 to 0.55 delta. Okay, that's what you're looking for. 0.45 or 0.55 delta. This one was done at, I think this one was done as 50. And what we wound up doing with it was very simply entering right there, right when it broke, and put the trade on. And we bought the September 17th 3,400 calls for, I believe, 56. And what that did for us was get us in a position in an option that had an implied volatility at the time under 20% and a delta of 50%. So we're going to get into another video later on the implied volatility delta ratio, which is important. But when you see something like that, where you're at or under 20% and you're at 50% delta, it's a sweet spot. And that's why this trade works so well and works so fast. It wasn't just the move. It was all the other underlying pieces that I've just given you that I would write down for when you're looking at these yourselves. So usually what you see is you'll see people buy when it breaks like through the 50-day and then they're buying the option. Look, by the time that you're up here and you're looking for that confirmation, it's over. You're not going to, your implied volatility is going to go up. Your delta is going to be up. So you're not going to get any delta expansion and you're not going to get any volatility expansion. So the move that you're going to get is going to be significantly less than the move that I'm going to get. And that's not going to satisfy you. Your goal is to make money here. So, and if you follow this and you replicate this, it will work. You just have to wait and be patient and find them. So now we're in the trade. Now the question becomes, when you're in the trade, how are you going to manage that trade? And so one way that I'm going to walk through it, and the way that we did it on this one, was relatively simple. What we did was just keep walking the stop up. So very simply, and let me show you on a 15-minute chart. Okay, so very simply, what we did was, let me get back to here and start from the break. I'm up, I'm in, I'm rallying, I look good, I hold the trade overnight. You get the first 15-minute bar, which they usually try to shake you out, which is exactly what they did, right? And then this bar needs to make a decision, and it made that decision, right? For those that don't know this pattern, I'm going to link this candlestick video at the end of this. I'd strongly recommend that you watch that candlestick video because it will show you why you knew that you were okay here. So when you see a break like this, you know you're in the right spot. And then we moved, tested, came back, moved, tested again. At this point, you move your stop up. At this point already, and I just want to point this out, from here over, before we even get into September 1st, okay, I am already up 75%, right? Now, I want to just explain this. From 3,400, okay, to 3,470, 70 points on a $3,400 stock, right, which is not even a solid 3%, we're up 75% on the option. And the reason for that, again, please remember this. Implied volatility when we purchased it was under 20%. If you look at the implied volatility of that option now, I believe it's 23%. So we have an 11% increase in volatility. When we purchased it, we had a 0.5 delta. You have a 0.71 or 72 delta on it right now. What does that do for you? That allows you to know that you had delta expansion as well as implied volatility expansion, which increased the underlying strike price. So a 3% move turns into a 75% profit because you know which ones to buy. And that makes all the difference. Which ones to buy and when to buy them. Makes all the difference in your options trades. So now when you broke out here, you're coming into the next day. And let's go back to the daily. So now we know we're up 75%, and we move the stop up a percentage of that gain. So we know that we cannot lose money because you're coming right here and you close over the 50-day. Now you don't know what the next day is going to bring. And yes, I'm going to walk through this whole trade step by step. So that next day we open here. Let's zoom in on this. You open here, okay, and you go up and you test, and you know where this resistance line is, and then you fail. So now you have to ask yourself, okay, well, that didn't work out the way that I wanted it to. I was hoping we'd push and we'd get up to here. Okay, at this point, when we're at this spot, we're up over 100% on the option trade. Okay, so what you do when you're in a position like this, very simply, is now you know you need to be careful. Now you have to figure out how you're going to protect your profits because you rejected. So when you look at that level on a 15-minute chart, and we can zoom in on this, and we got up here, okay, you'll see that I came out and stated you need to raise your stop, okay, and you need to really watch this area, okay? Your stop is now 75%, and you really need to watch what's going on here, okay? And we come back down, okay? You have this little pattern here, and you have a little bullish engulfing here, so it makes it look like you're going to run, and then you snap down here. Now, once we snap this level, okay, I have failed. Okay, once I see that I have failed, that's it. The trade is over. And this is where we locked in 100% of the gain on that trade. So once I broke down and I'm on that level, I'm using multiple time frames. And I know I'm throwing a lot at you, so you may want to watch this a couple times. Okay, I'm using multiple time frames to determine my exit. Okay, now if you go and take a look at my exit versus, where the stock or where that option is right now, I think that option's back down to a 75% gain. Okay, and you couldn't even put that trade on right now again because you're at a 72 delta and a 23% implied volatility. So what you're getting here is you're getting a way to exit a trade. You're using your daily range to make a decision on where we may have an issue, okay, and then you're drilling down into your 15-minute, and you can do this with anything, to determine where it may have topped out. Now, we don't know that that's 100% going to work, but that's enough. That's enough for me to say, okay, it's time to get out. So that's how you would get in, up, and stay in. This option works so well, we didn't even really have to get into a trimming. We just had to come up with a selling strategy because it worked. Now, if you look at what happened after, clearly the stock has come back down, and now we can see that it's having trouble with this area. So maybe it goes, maybe it doesn't, but what will happen now is you're not going to have the same push that you have because of the implied volatility. You're going to need a greater move for that to happen. So that's one of the reasons you couldn't do it now. Also, I'm under this trading range right now, so you really wouldn't want to do that. You really want to catch these when they're here. Now, anybody can duplicate this, anyone. Okay, all you need to do is focus on a couple key things. Those keys are as follows. You need to find a stock, okay, that has low implied volatility of around 20%. You need to be looking at an option that's very close to the strike price of the breakout, like this was, okay? That's roughly a delta between 0.45 and 0.55, okay? They're the two major things that you need to look at. Now, obviously, if the move doesn't happen, you have to move on. But that's how you can duplicate this, okay? So I hope that made sense to everybody. As always, subscribe to the channel. I am going to do more advanced videos on options for people that are a little more advanced on this topic. But this is a great way of just getting people started and actually understanding the lingo and what is going on. Again, as always, subscribe to the channel because we're going to do more. We're going to do more of these. I hope everyone has a great day, and I hope you found this productive.